So our next speaker is going to cover the current state of fintech in Canada. And that's Michael King, and he holds the Tangerine Chair of Finance, founder and co-director of Scotiabank Digital Banking Lab at Ivey, Canada's first research centre studying the impact of fintech on banking and financial services. So let's bring up Mr. Michael King.
Okay, good morning, everyone. So I'm a finance professor at Ivey Business School, where we actually have been studying fintech for the past 2 years. We were actually set up in 2016 with generous funding from Scotiabank, $3 million over 10 years. We're independent of Scotiabank, although we share the same name as their digital factory. We've been producing a lot of educational materials, organizing public events, as well as doing outreach, particularly to regulators and other members of the ecosystem to try and promote this, what I consider to be a really valuable and important industry for Canada. So I'm going to take a step back from the crypto economics part of the conference and give you an overview of what I see, if you like, a little bit of a report card on what's good and what's bad and what's ugly about the ecosystem and the state of fintech in Canada. By ecosystem, I mean the different parts, which include what you see here: talent, capital, demand, as well as regulations. On the right, you see there from the report that was done by the NCFA and the Toronto Regional Board of Trade, the ranking of different cities around the world. You can see that Canada is doing very well, with Toronto in 7th place, followed by Vancouver and Montreal. Those kind of ratings are actually looking at those different elements of the ecosystem, and you can see that we've got a little bit of ways to go to catch up with some of the leaders. What I think is actually really impressive is the incredible growth of startups in Canada. 2 years ago, when we started looking at this, there were around 300 startups. And now, speaking to, say, investors in the VC space, they're tracking more than 800 startups here in Toronto, Vancouver, Montreal, and coast to coast, with particular strengths, as you know, in artificial intelligence, blockchain, peer-to-peer lending, and actually one that doesn't get a lot of press, but mobile banking and the applications that are being rolled out by the banks. We obviously have a growing number of incubators and accelerators, and that's not just Mars and Communitech. There are now those kind of resources available coast to coast. We've got a lot of dedicated conferences, such as the one that Craig has been putting together now for 4 years, and a number of others where you can sort of get education, and other associations like the National Crowdfunding and Fintech Association, the Digital Finance Institute, that are really trying to pull this ecosystem together. For our part at universities, not only does Ivey have a lab, we now have one at Rotman as well as at Queen's, which is very positive. On the bad side, actually, is the lack of there are some notable partnerships between large banks and startups, but they're very few and far in between. When you talk to startups, they find that it's a maze to actually work with the banks. It's very difficult. It can take 6 to 12 to 18 months to get in, and you never get to speak to the people who can actually make decisions. Ironically, if you go and speak to some of the in-house VCs at some of these banks, they say that not enough startups are pitching them. I was speaking to one insurance VC who said that he sees 1,000 startups a year, of which only around 20 are coming from Canada. So if you're in the insurtech space, that's actually a very growing area. Another problem, of course, is that fintech tends to be concentrated in a few cities, as we saw from the initial slide. And from a researcher point of view, and also from the point of view of people looking at what the opportunities are, there's a real lack of data availability, and I'll speak a little bit about that. The worst part for me is the explosion of individual apps that are kind of starting to populate our cell phones, and it's nowhere near what we have in China with WeChat, where you have the integration of a number of different apps all under one financial service or platform. Recently, last month, we had the announcement of the 5 superclusters that are going to be funded by the Canadian government. There was not a fintech cluster, which suggests that there's a real there's no focus on financial services from the federal government's point of view. And this is a theme that I'll come back to again about how as Craig mentioned, we really do need to have a national strategy. We need a champion, and it should be the finance minister. This is what they have in Australia. This is what they have in the UK, Hong Kong, and Singapore. When it comes to the startups, this is compliments of the Fintech Grocer Syndicate. Sue, Britton, and team are here, and they're basically tracking more than 700 startups. And their role is really as a consultancy that's helping accelerate the market expansion and collaboration for fintechs with incumbents and the ecosystem. So if you want to, Sue, if you could just wave over there. So if you're interested in learning more about that, please approach them. But you can see many, many names, and these kind of charts are exploding. We also have a number of noteworthy successes. Could I have a round of applause for Ethereum? Who doesn't think that this is one of the best blockchain-based companies? Thank you, Vitalik. Now, we do have Anthony Diorio, who's going to be speaking later today, one of the co-founders. But maybe less well-known is SecureKey. SecureKey by Greg Wolfen and team is actually not only in partnership with all the Canadian banks, but also signing up the insurance companies to solve the problem of digital identity. They're working with the Canada Revenue Agency. That's a fantastic story. Another great story, Real Matters, working in the real estate space. Not only did they go they got funding, they've grown, and they've gone public, one of the first IPOs. We have Lightspeed out of Montreal, which is a point-of-sale payments solution. Thankfully, Caisse de Dépôt stepped in to actually take out the VCs behind that in order to keep this company in Canada, and they've also been going for more than 10 years. The bottom left, of course, artificial intelligence with firms like Element AI. That's they're tracking all of those little dots are artificial intelligence, and this is going to be a very big, important part of banking. They're calling it cognitive banking is the way it's used in the banking space. And then bottom right, of course, Wealthsimple has received another $65 million from Power Financial, bringing the total up to $165 million. And what's great about Wealthsimple is that they show that Canadian companies should not only be developing products for the domestic market, they should be born global. They're going into the US and the UK, and that's a very exciting initiative. People do say that when it comes to talent, that we've got great depth here in Toronto and in other cities in Canada, and fortunately one of the areas that Canada is quite forward-looking is in the visa schemes to bring in great talent from abroad. We've seen also that we're exporting talent. Waterloo has the second highest number of employees in Silicon Valley, which is a real great compliment to the work that's being done there. We've seen that creative destruction labs started at Rotman are now coast-to-coast, partnerships with everywhere from UBC to Dalhousie. And we have our own here, the Blockchain Institute, started by the Tapscots in Toronto, which is trying to bring together the work there. I will mention that the one area where Canadian banks have been active is in investment in AI. And for example, RBC has been very active in supporting not only startups, but also research efforts there. The bad, of course, is that there's talent shortages. If you talk to startups who are trying to hire either data scientists or AI programmers, it's extremely expensive and they're hard to find. Big companies like Google and Facebook are hiring them, as well as Amazon. And for our part at universities, we have to do a better job of educating young people for careers in this space. I'm pushing very hard that this is a great opportunity for people who are interested in finance, as opposed to going into the traditional banking to go into startups and create real wealth in Canada. So we're introducing some curriculum there. Of course, the fact that we're exporting so much to Silicon Valley is also a negative, in my opinion. It would be great to keep those people here at home. And something that you don't hear a lot about, but anecdotally, there's been a lot of turnover in terms of the leadership and the innovation centers within the big banks and the insurance companies, suggesting that they're having a hard time changing the culture in those organizations. When it comes to capital, actually, there's quite a bit of capital available, and the data suggests that it's growing. VC dollars invested in across Canada have gone up to 3.5 billion Canadian dollars. And money devoted specifically to fintech from VCs has also grown, as I'll show you in a moment. There's more dedicated VC funds specializing on fintech, and we also have a lot of corporate venture partners who are actually setting up funds. Not Portage, you may know from Power Financial, But for example, National Bank Financial and Intact, the insurance company, have in-house dedicated VC funds looking to invest in startups. Another big player in this is the C100, which you know is based out of Silicon Valley, and they're really doing their best to bring the talent back from Silicon Valley into Canada and sponsoring a lot of events there. In terms of the bad part of it is, of course, there's a gap, many people would say, or at least a restriction in the availability of late stage or growth capital, with very few unicorns and few exits. If you look at this chart, you'll see that on the left, the data from this is the growing number of funding from VCs from the Canadian Venture Capital Association. The final chart shows that there's $3.5 billion, and the top 10 deals accounted for 27% of all the funding. They look at mega rounds or deals greater than $50 million in investment. There was 15 in 2017. On the right-hand side, this report from CB Insights and PwC shows investment specifically in fintech. And as you can see, it's also been growing and has been quite vibrant in the past 2 years with over $450 million in each of those 2 years. This chart from Business Development Bank of Canada has been doing a lot of research and outreach for entrepreneurs, and they've done an overview of the VC landscape. You can see here from left to right the different sectors of VCs, ICT or communications and technology, internet on the left, clean tech, healthcare, and on the right, generalist, and going up from bottom to top, pre-seed and seed, early stage, and then late stage. And you can see, for example, a very large fund being run by Georgian partners out of Northern Toronto that's specialized in AI that's in this space. So there's some great information available in these kind of reports. This report actually is done by the University of Cambridge in collaboration with the National Crowdfunding and Fintech Association of Canada. It basically is tracking money invested in these different spaces. This chart on the right shows that for Canada, the biggest area that's growing is balance sheet marketplace lending, where platforms are actually providing loans but keeping the loans on their own balance sheet, as opposed to passing them through in a sort of peer-to-peer platform, which is much smaller. Another area, when it comes to equity crowdfunding, the biggest area in Canada appears to be donation-based crowdfunding. Now, this data is probably not entirely indicative of the amount of activity in Canada because of the lack of participation of platforms. We'll be doing Ivey will be assisting with a survey later this year, along with the NCFA and the Canadian Lenders Association, to try and get better data on what's going on in order to show policymakers how important this area is and how it's growing. So finally, demand. Demand, when I say demand, I mean who's actually using and buying fintech applications and funding that ecosystem. Believe it or not, actually, the banks are seeing huge traction from consumers on their mobile apps, with the number of mobile transactions actually surpassing the number of online banking transactions in June of last year. That far exceeds the number of transactions that are being done in branch. So most Canadians now are banking on their phones. That's good news. We're also seeing some very good provincial efforts to try and promote the fintech ecosystem. In particular, the Government of Ontario has set up an experts panel and is pushing a lot of initiatives here. The bad part is that there's very low fintech adoption by Canadians relative to other countries. And part of this comes down to poor consumer awareness and a lack of education about whether this is safe and sound. The really ugly part is actually when you speak to people who are dealing with the large financial institutions, when I say that it's very bureaucratic, one bank, an individual suggested that in order to get a fintech partnership signed up, it took over 120 signatures to get that fintech inside the bank, which is obviously excessive relative to, say, what's going on with banks elsewhere. There's also been no evidence of government procurement, which should be the first customer for every fintech, and that's certainly been what's been driving SecureKey, for example. Here's the FinTech Adoption Index. As you can see, Canada is at around 18%, which is an increase, but it's half of where adoption is worldwide at around 33%. China is that very large bubble column at the top. On the right, just comparing Australia and Canada, you can see that we're relatively close when it comes to the reasons for the barriers to fintech. The chart in gray is actually 2015 and yellow is 2016. You can see that the barriers are coming down. That one chart is awareness of fintech has really increased. But one of the reasons people aren't using fintech apps is because they trust their banks more. That's the bar on the far right. Finally, when it comes to policy and regulations, the Canadian situation, I actually, despite being very critical of policy and regulations, there are a lot of good things that we can say about this. The Competition Bureau did a great study, which everyone should look at, talking about how we can increase access for startups and new businesses in this space. Ontario set up that experts panel. The CSA, the Canadian Securities Administrators, which coordinates securities regulators across the provinces, has set up a sandbox following on the announce of this OSC Launchpad. The CSA actually has taken quite a forward-looking approach to the regulation of ICOs and has said they're going to look at them on a case-by-case basis, although they do view them as a securities offering. Okay. The Bank of Canada has been in the forefront. They've been doing a lot of proof of concepts of using distributed ledger technology and e-money. They're actually onto their 5th initiative, looking at cross-border transfers of money with a foreign central bank to see how that would work. And of course, we've got payments modernization coming down the road. The bad news is that the pace of legislation change is very slow. I'll say more about that in a second. The worst part for Canada is that the equity crowdfunding rules are just far too restrictive. I think most people would say that you don't need to have, if you can only invest a minimal amount as an investor, as a founder, you don't need to have that many investors. You need to get your $1 million fast and from as few investors as possible. It's also, when the Competition Bureau interviewed regulators, they found that there were 26 different parties they had to speak to, which is incredibly complex and costly for startups to navigate. Everyone says that certain regulators are not engaging, such as OSFI and FinTech, and we don't see many efforts to really promote our fintechs abroad, similar to what the UK is doing, perhaps. The biggest news is what's going on with the review of the review of the Bank Act, which is called the Federal Financial Sector Review. It's taking place in 2019. They had 2 consultations, and in the budget last week, they did put language in the very back that will allow them to make changes to 2 really critical areas. One, open banking, which means consumers being able to choose who gets their data, particularly if a startup wants it. And 2, the ability of Canadian financial institutions to invest in startups. That has been a big obstacle, and that's going to be addressed in the coming year. On my final note, I have said, as I did last Friday, that Canada needs to have a strategy. We need to have a national champion. And when we're looking at the federal government, what they're doing, they're leaving the provinces and the municipalities to run the ball with this. That's not what other countries are doing. We need a national FinTech advisory council, similar to what we see in other industries. We need more education of the public. And finally, we need government procurement. Okay. If you are in town in a month's time, we're running an event on the future of digital advice here in Toronto. You can join us for that and learn about what's happening in the worlds of robo-advice and digital wealth management. That's it for me. Thank you very much.